Welcome back to Trading Day, your call. It is the last 10 minutes of this show and you want to get your market queries in as soon as possible. 1300 30 34 35 is the number to call. You can email us your call at yourmoney.com.au. Let's take a very quick look at what's happening with the Aussie market. As you can see, they're down by about 61 points to 62.36. I'm looking at my laptop now and it says financials index is seeing its worst day in 5 months. The tech stocks are also seeing its worst day in 2 months. On the other hand, we're seeing the gold stocks being the best performers today. Gold, of course, being the safe haven in this time of uncertainty due to the trade tensions between the United States and China. Looking around at our neighbors there, the regional markets, to see what's happening there. Mostly a sea of red, except for the Kospi there. I did have a look at the Nikkei a little earlier. It fell to a 3-month low. And of course, the China-related stocks feeling the pain mostly. Well, joining me in the studio is Elio D'Amato from Lincoln Indicators. We also have David Novac from Wealthwise Education. And John is calling in from Geelong. What is your question, John, for the panel?
Thank you for your informative program. I'd like to push forward about Grange Resources and Milton going forward. Thank you so much.
Okay, Grange Resources and Mount Gibson, I think that was. Okay. Do you have any thoughts on Grange Resources?
Oh, well, I mentioned this one quite a number of times now on the show over the last 6 to 12 months. Look, this is one of my major holdings I've had for a while. I mean, when below 20 cents, you know, from average price around 17. I mean, I've been happily receiving a dividend yield of about 12-13% fully franked. I mean, look, it's over 8% fully franked yield even at this price level. Look, there's short-sightedness of investors in this stock. I mean, look, they came out with a quarterly result which wasn't their best quarter. I mean, it's slowed down, but the company announced this. They said that the first half, the production would be lower, but they'll make it up in the second half because they're going underground now in their underground mining. And, you know, they substantially increased their resources in their magnetite, you know, iron ore project in Tasmania. And, you know, the company, this is what's crazy, the valuation, there's, again, my main criticism is the company hasn't done much investor presentation or shareholder presentations out there, and they don't have an investor relations person or a sponsoring broker, so you know they don't promote the merits of the company and the results. I mean, look at the results of their December year results: 113 million after tax profit, up whatever it was, 80-odd%, and the dividend yield, the price-earnings ratio is less than 2. They got 207 million in the bank at the end of March. Got a market cap of just under 280 million. So you've got an enterprise value of less than 80 million here, and the expected, you know, the question is, of course, when they've got a commodity of iron ore, you know, where the iron ore price will be in the next 6-12 months. But look, I expect there'll be a rebound in the second half when they start at full production again, but they still made profit in the first quarter. I estimate around 20 million, and they are using some cash to, you know, go underground at the moment. So I wouldn't be panicking and selling, but short-sightedness from a lot of investors out there.
Okay, I want to come back to you in a quick comment on Mount Gibson, but Grange Resources, your thoughts, Elliot?
Yeah, don't have really much else to add. I mean, you know, it's on a PE of 2. It's one of those stocks that many investors always have on their little screens when they run their filters, and then all of a sudden go, geez, what am I missing here? And look, it is an interesting play. I mean, we need to remember that you know, Shagang, I think it is a major shareholder which owns close to 50% of the business, which makes, you know, again, whether the interest is there. And maybe it is that concentration on that one asset in Tasmania. Unfortunately, I can't add any more than David, because David's right. David's been speaking about it for quite some time, so there's not much I can say other than it is financially healthy, it is profitable, and by all accounts and all metrics, it just looks exceptional. It trades on, I think it trades about 800,000 $100,000 a day, so it's hardly completely a liquid stock, but its market cap's only around $250 million. So it definitely is in that smaller realm.
Okay, we're just running out of time. A very quick comment on Mount Gibson.
Mount Gibson, look, this one, they've got the Koolan Island operation just restarted. I mean, that's a very high margin, profitable business with iron ore prices. They've got a lot of cash. You know, they've had a great rally. I'd be buying on any pullback on Mount Gibson. Longer term, wherever the iron ore price is, they'll be doing very nicely out of that.
Yeah, and yeah, return to strong financial health in the last few periods. Koolan Island's back up and running, and yes, strong iron ore prices makes their product exceptionally attractive to the market.
Okay, Mount Gibson today trading at about 114. On that note, we're going to have to end the show, unfortunately. Thank you so much for all your calls, and thank you for your emails. I'd like to sincerely thank Elio D'Amato from Lincoln Indicators, David Novac from Wealthwise Education. It's been so lovely working with you. Thank you so much.
Pleasure. Pleasure.
Insights. And do stay with us. We have more trading day action with Leanne Jones.
This content is not intended as financial advice, and we are not liable for your decisions. You should seek independent advice prior to making any financial decision. Your money or guests appearing on this program may receive a fee from companies featured in its programming.